Who is user? Why would your Zoom name be user? For crying out loud, your Zoom name should carry your name. Okay, so liquidity. What is liquidity? I believe by now everybody will have pretty much have a close idea of what liquidity is and algo. So what is liquidity, guys?
It's what drives the market.
You said what?
It's what drives the market.
Yeah, what drives the market? Okay. Other contribution?
Just known points in the market where money is said to be resting based on, like the different types of trading we talked about in the first day.
Yeah. Okay, that's number 2. Under contribution?
This a block of orders, maybe sell, maybe buy for taking out in the future.
Okay. You see, that's one thing about liquidity. The definitions are usually fancy. Everybody is always pretty much close to what liquidity is in the market. But the major challenge, what the people have is, when I ask this question, what is liquidity in the market? How do you tell what liquidity is in the forex market? We know it is what drives the market. It's the level that money is sitting on. It's this, it's that. But what is liquidity in the market? Nobody's saying anything, man.
Oh, sorry, I didn't realize he's asking a question.
Yeah, say it again, man.
What is liquidity in the market? So that's it. That's always the answer, man. Every time I ask that question, it always comes with a silence. It's just magical. I don't know how it happens, but everybody just goes mute. Then the next thing I do is I put the question in a better way that is going to simplify it to you, and a number of people will begin to get it from here. So this is how it goes next. How? We know liquidity is money, right? So how do you provide liquidity to the market? How you as a trader, because there is no money in the market, money is being provided. So the money being provided is what the market is taking to carry out the transactions. Do you understand what I'm saying now?
Yeah.
So how do you provide money to the market?
Here's my stop loss.
Somebody says stop loss.
Pending orders, things like that. Transacting, basically.
Come again?
Transacting, so pending orders, things like that. Actually going into the market and placing an order instantly. That's providing liquidity.
Yeah. So now you see what I was saying. When I put that question that way, a number of people start to get it. Can you see that everything you needed to know about liquidity, it actually started from your MT4. Liquidity is money you provide to the store, okay, to the cashier, to the attendant, for a product to be given to you, right? So now liquidity is the value you provide for a transaction to happen. So you ask yourself, how do you provide liquidity in the market? And you would realize that this has nothing to do with equal lows, equal highs, or whatever. However, it has everything to do with how you put your money in the market, which is by setting a limit order, a stop order, be it buy stop, buy limit, sell stop, sell limit, or by setting your stop losses, by executing your trades, by setting a break even, any type of order at all that you would like to place in the market. That order you're placing is you providing liquidity to the market. Now, you have stop loss, you have pending orders, you have execution orders, which is market execution. You have break even. Am I correct?
Yeah.
Is there any other way other than this? Is there any other way your money is being represented in the market?
No.
Right? There is no other way, isn't it? Or if you have any other one, please let me know. None, right? So all of these is what liquidity is in the Forex market. The last class I had on liquidity, somebody said, take profit. Take profit is not liquidity. When you set take profit, oh my goodness, hold on. Mohammed Habib must have joined this call again. Please mute yourself, Mohammed Habib. And there is a Toby, please mute yourself. Thank you. Okay, so when you take profit, you are taking liquidity out of the market. You're not providing liquidity to the market. So that is not a liquidity for the market to take. So these are all what liquidity is all about. That's all you need to know about liquidity. That's the end of our education for today. Bye-bye.
I want my money back. I want my money back.
Yeah. Okay. So when we look at the market, at this stage, we all know that everything that happens in the market is a transaction, yeah?
Yeah.
So when we look at the market, we see the market gives you, for example, in an uptrend, you see something like, okay, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Oh shit, it took that low. Let me go, aha, higher high. You see that?
Yeah.
Okay. Give me a sec, please. Aha. So, give me a sec, please. Boom. So we know that the market gives us higher high, higher low, higher high, higher low, higher high. These are nothing but transactions in the market. True or true?
True.
True. Good.
True.
Now, in this case, I'll be like, okay, I have 1, 2, 3, 4, 5, 6, 7, 8, 9 good transactions here. Now, all of these transactions wouldn't have happened without liquidity, without money being paid. No transaction can happen without money being paid. Okay? So now, we want to tell where the money is in the market. The money is seated where you provide liquidity to in the market by placing those orders. And that is why you, as an algo trader, you need to know where most traders will more than likely put their trades on. Okay, so now let me ask you this question. The first item here is the stop loss. As a trader, where do you put your stop loss in the market?
Below a recent low, above a recent high.
Good. So which means we have liquidity here, we have liquidity here. True or true?
Yeah.
We have liquidity here, we have liquidity here. We have liquidity here, we have liquidity here. We have liquidity here, we have liquidity here. Okay, so let's leave these two out of it for now. Above every highs and below every lows. Let me first add this. We have liquidity here, and we have liquidity here. Now, this explains why price would take out this high, and next thing we see is correction happening. Oh, so that was what really happened. Price grabbed liquidity and then, use that liquidity to carry out this transaction. So that's it. Is it making sense now?
Yeah.
Good.
Yeah.
But wait a minute, what is price grabbing here though? Because it's supposed to grab this low to continue higher. At least this is pretty much understandable, yeah? But what about all of this? Well, let's continue. We just talked about stop loss here. Now let's look at the pending orders. Okay, pending orders. Where do you set pending orders? In the market, for example, you'll be like, breakout traders will be where? Waiting for here to break out and they set their buy stops here. True or true?
Yeah.
That's how traders will be where? Will be waiting for price to reverse back and then still set their what? Pending orders here and have their stop loss here. Right? Am I correct?
Yeah.
Good. So you see why there's a lot of liquidity sitting on this high here. Does it make sense now?
Yeah.
Yeah.
Good. So that's why this level still maintains that level where liquidity is sitting. And the same thing goes for what? The sell stops and the sell limits. So number 2, tick. Let's go to execution. How and where do most traders execute their trade? Do they execute their trade halfway, or they are interested in executing their trade at the structural points? We are interested in executing your trade, everybody?
Yeah.
Structural points.
Structural points, obviously. You see that? So everybody is more than likely interested in placing their trade in the structural points, and which means you have liquidity sitting here, 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 and here. Boom. If you execute this trade, go in profit, do you break even or not?
Yeah.
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 Most traders tend to break even where? almost above their entries. That is what break-even is, right? No loss, no win, isn't it? At your entry, am I correct?
Yeah.
So where do you break even? Somewhere there, am I correct? Somewhere there, somewhere here, and like that too. Am I correct, please, everybody?
Yeah.
So we are all on the same page. Boom. That's how your money is being represented in the market. And those are the levels where money is sitting in the market, because that's how every other trader is looking at the market. And since you know this now, what you need to do is to watch those levels, watch how price takes that liquidity out, okay, quote and unquote, taking their stop losses out or their break evens, because once the stop loss is taken or the break even is taken, they are out of the trade, hence the market grabbing money to facilitate the next transaction. Does that make sense, everybody?
Yeah.
Ivan, are you there?
Yeah, I'm here. I'm here.
You understand everything so far, yeah?
Yeah, I understand everything.
Awesome, because you deserve to. You've waited for so long, man.
Yeah, I waited for so long for one month ago.
I know. I appreciate it, man. I appreciate it. Thanks, man. I appreciate your understanding. Okay, so now, you see, the thing is, instead of you sitting down and racking your head and say, wait, is this not the high? So there's liquidity here. Oh, there's stop losses here. Oh, there's pending orders here. No, you don't have to do that. Okay, I've done the right thing for you guys. All you need to do is follow the 3 types of liquidity. What are the 3 types of liquidity? Given the market structure and given the levels where these liquidities are sitting on, I have divided them into 3. And the first one is called transactional liquidity. Okay, transactional liquidity. Okay, into bracket TLQ. And this is the liquidity for correction. Then we have structural liquidity. And this is the liquidity for continuation, popularly known in the community as the last high before the main high, or last low before the main low. You must have seen that in the community, haven't you, everybody?
Yeah.
And you'll be like, oh, what does that guy mean? Now you know. Now, finally, we have the inducement liquidity. ILQ. This is the liquidity for what? For expansion. Transactional liquidity, structural liquidity, inducement liquidity. So let's start with the first one, right? Transactional. Hold on, let me drink some water. Boom. So we start with transactional liquidity, a typical uptrend. So we start with an uptrend. So in an uptrend, you have higher high, higher low, higher high, higher low. Okay, let me draw this again. Higher high, oh, that's not me. Higher high, higher low, 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 higher high. Let me just see it this way so you guys have enough details to work with. Things like that. Now, after identifying the trend, okay, the first and most important thing is the trend for transactional liquidity. We can tell for sure now that this is an uptrend. True or true, everybody?
Yeah, true.
Yeah, true.
Good. So now that we can tell that this is an uptrend, what you have sitting here is what? A liquidity that was called the transactional liquidity. So when this liquidity is taken, what does it do? It enables this transaction to happen. Every time as price proceeds higher, every time a high is taken, it enables that transaction to happen. Transactional liquidity taken. Remember, as price continues in an uptrend, what is this? This is going to be seen as the impulse and the correction. So that's why it is a liquidity for what? Correction. Transactional liquidity taken, we expect a correction, it goes. Transactional liquidity taken, we expect a correction, it goes. Transactional liquidity taken, we expect a correction, and it goes. Nice. If you look at this closely, you're going to realize that, okay, we could account, at least we could say, oh, transactional liquidity was taken out, whatever. We could account for this transaction. We could account for this transaction. We could account for this transaction and this transaction too. Everything is pretty much efficient, right, everybody?
Yeah.
Yep.
Yeah.
Good. But now the question is, what about this transaction? What about this transaction? What about this, and what liquidity is responsible for it? The liquidity responsible for it is what we call the structural liquidity. Two things are essential for structural, for what's it in continuation trade. EPA and the structural liquidity. Okay, so I believe everybody knows that already, because the first rule is never place a trade, never trade from inefficient price action. The second rule is what? No MSU, no trade.
Right.
Now, you ask yourself, wait, what does it mean by structural liquidity though? Everybody, please pay close attention to what I'm drawing. What does it mean by structural liquidity though? You see, when you look at the market, remember every push in the market have its own what? Its own market structure, right? So now when you look at the market, the internal structure in the market, which is what most traders do, they look at the higher time frame, then go to the lower time frame to refine it, get the BOS, and then trade from there. Am I correct?
Yeah.
Yeah.
Good. So now the internal time frame will more than be something like this, right?
Mm-hmm.
Now, what most people will do is, if they follow this trade, for example,
Yeah, Mike.
there is
Mike Yusuf.
Yeah, bro. You are like a robot talking.
Yeah, you turn into a robot, man.
Can you guys hear me clearly now?
Yeah, now we can.
Yeah.
The algo was taking over.
I prefer to play in the robot way.
Yeah. So now, what most people look at is, once you look at this internal structure, for example, you see this will be seen as what? Let's say this will be seen as BOS, right?
Yeah.
Then most people want to what? Buy from the retest, isn't it?
Mm-hmm.
Then when they buy from the retest, they break even here, right?
Yeah.
So in most cases, when price comes back, price comes to target that level, because that level is where liquidity is sitting on. And if you look at this higher high, higher low, higher high, higher low, higher high, higher low, higher high, you're going to see that we have the main low here, and this is the last low before the main low.
Okay.
So that is where structural liquidity is sitting on.
Okay.
So price comes there, takes out structural liquidity, and then continuation happens. Is it clear, everybody?
Yeah.
So you see here, last low, before was the main low, structural liquidity will continue. You get the logic. You see, the logic tackles how, because remember from the very first day, we said the market is made up of what? Human behavior. So the logic is to understand the step-by-step process of most individuals that trade the market. How do they behave towards the market? So now, if you look closely, in this case, this is the last low before the main low. Price never got there. Am I correct?
Yeah.
Yeah.
Good. So this is to show you that when you have your structural liquidity level marked, don't always wait to say, oh, price is definitely going to come to that place and reverse. No, don't do that. Price may come, price may not. It is until price comes there, then you react. Remember, never have expectations on price. Just keep listening to the language it's speaking. When you understand better the language it said, it says go, then you can now go. No expectation at all.
Okay.
Hope it's making sense now, everybody.
Yes.
Yeah. Now, these that didn't tap into this liquidity, can you still catch this buy, everybody?
Yes.
Yes. Why can you catch it? Because you have what? EPA, and once you have MSU, you can buy.
Yeah.
Good. And the same thing applies to structural liquidity. I never buy directly from structural liquidity. I never buy directly from, in fact, let me not say I never. In most cases, I don't buy directly from structural liquidity, except I am hedging a trade. That's when I can buy directly or sell directly from structural liquidity. In most cases, I don't trade from structural liquidity, except I am hedging a trade. The reason for this is because structural liquidity is not enough. You don't even know if it will be respected or not. We just know that there is liquidity there, and once it is taken, we can now wait for what? The final confirmation, which is what? MSU.
Okay, so you wait for MSU below the last low before main low, is that?
No. Once the last low before main low has been taken, then I ask myself, do I have an MSU into it? If yes, then I buy it.
Okay.
If I don't have an MSU into it, do I have an MSU away from it? If yes, I will also buy it too.
Okay.
So MSU still remains the major determinant of me picking that trade. However, if I'm already, for example, I'm already in the sell,
and I get to that level, and I know I'm in an uptrend.
Back to robot.
Yeah.
Back to robot.
I'm back to robot. I think that's my mic though. Perhaps it's low. That's why. Okay. So what I'm trying to happen is I'll join with my iPad for those of you that can't hear me, and then I'll connect to the mic of my iPad while I charge this. Okay.
Now okay.
All right, guys, can you hear me now?
Yeah.
Yeah.
Now you are human again.
Yeah, I'm human again. All right. So you get the logic for that structural liquidity, yes?
Yeah.
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 Awesome. Rodrigo, you saying something to me or to someone else? Okay, I think you're talking to your daughter or son. All right. Let's look at inducement liquidity. But I was thinking though, before I jump to inducement liquidity, let's quickly look at some chart works here.
Okay.
Yeah.
Okay.
Now, you know, at this point, I don't think anybody is surprised anymore because everybody's like, yeah, everything Priscilla says is pretty much different. So I was expecting something different in liquidity too. Shouldn't be. Trying to open my charts. How many of you caught the sell yesterday? That's my sell.
I missed it. I did.
a guy sold like a bitch.
Sorry, I can't see the charts.
Yeah, I'm loading the chart actually. That's why.
Okay.
Yeah. Should be able to see the charts now. Right?
No, I can't see.
Okay. Yeah.
Good. Now,
Oh, yeah.
if you look at this chart, I'm just going to show you guys 2 examples and then that will be it, okay? So that we can quickly wrap things up, okay?
Yeah,
Okay.
Now, if you look at this chart here, let me use this guy. You see this low, sorry. Now, you see based on substructure, there was a break here, so price continued higher, okay? Then it continued lower, okay? So if you look at what happened here, I don't want to draw with free hand because it won't be accurate. But if you look at this low, all the way here, you see, at this point here, the new, what we had here was lower low, lower high, lower low, lower high, then again, lower low, am I correct? Then lower high, right? Then lower low, then lower high. Right? Now, this push, after price came, this push is together. In all of this push, is this the last high before the main high or not?
Yeah.
It is, right?
Yeah.
So,
Yes. Yeah.
so what I'll do is, I'm just going to put a square here, a rectangle. I'll just drop it there for now. Now, let's see, let's get that switch. Now, if you look at all of this push here, is this the last low before the main low or not?
Yeah.
So if you look at every push is significant in its own distance. If you look at this push, you know, this is the last low here before here as the main low, true or true?
Yeah, true.
We have MSU here, that's fine. These are, in this MSU, all of these, you have lower time frame last time for the main high last low. It is fractal in nature, obviously. Those are liquidity levels. And all of these things that work, that are objective, they are always fractal in nature, okay? Now, let's extend this into the future. Boom, structural liquidity. See that?
Yeah.
Boom, structural liquidity. You see that? Boom, structural liquidity. Can you see where market is turning from majorly? Is it making sense now, everybody?
Yeah.
Good.
Yep.
That's for that one. I don't want to touch more than that. But if you look at this chart, you will see a lot of lovely trade efficiency, price sold, then it made lower low. Am I correct? Then it made
Yes.
zero. Then it made what? Lower low, lower high, inducement. Then what? Mitigation, and voila. Go again. Yeah, let's leave this for now. I hope you guys understand what structural liquidity is all about now, at least with this example.
Yes.
Good. And remember, you combine everything with everything. That's how you get the answer. I just want you guys to see what it looks like on chat. Okay.
Okay.
Okay, good.
Good. Now let's go to the last but not least, the inducement liquidity. You guys know what this is already, but then let's, for those who don't know, let's put a system to it, okay? Now, inducement liquidity, for example, in an uptrend, is always sitting in the new higher low created. So if I have this push, this push, this push, you all will agree with me that I have a low, a high, a higher low, and a higher high.
Yes.
The new lower low, the new higher low created is here, isn't it?
Yes.
Hence, that's where inducement liquidity is sitting. So if price comes here, I will say inducement liquidity has been grabbed. Now, if price fails to come here and price comes to this level, for example, and then pushes higher again, everybody, does my inducement liquidity stay here or it has moved to here, everybody?
Move to here.
It's moved here.
Yeah.
Yeah.
Why? Because here is now the new higher low. So inducement liquidity in an uptrend is always found in the new higher low. And in the downtrend, it is found in the new lower
Low high.
here. That's the new lower high. One, it seems the time we usually have our session is often late for you, yeah?
It's about 8 p.m. to 12 a.m.
Oh, wow, that's nice. Well done.
Yeah.
Now, we mentioned that inducement liquidity is the liquidity for what?
Expansion.
Expansion. But what does that even mean, though? You see, when you look at this market, for example, you would agree that there is liquidity here. Am I correct? That's what structural liquidity, isn't it?
Yeah.
Mm-hmm.
There is liquidity here. That's what structural liquidity, isn't it?
Mm-hmm.
Now, if this liquidity was not taken, try just gain efficiency, grab some type of liquidity which is going to be more or less internal liquidity, just internal structure. Of course, so now you see this will be more of the main push, right? But this is more of the internal push. So which do you think carries more liquidity? Is it the higher time frame or the lower time frame?
Yeah,
Higher time frame.
Good. So excuse me. So now, if price, for example, comes here, grab this liquidity, that's good money, right?
Mm-hmm.
Yes.
Hold on, please. Trying to change this guy to red. So, hold on. Viewers, please let's look into it after the class, okay? All right. So now, if price takes this low, that's good money. Now, good money taking, price continues higher. We're happy. Now, if this is 500 pounds, 500 pounds here gives you nice moves. If 500 pounds is taken, here is another 500. Do you expect this or you expect this?
Yeah, bigger expansion.
Yeah,
Yeah. Exactly, because there is more money, right? Now, if price comes here, do you think it is going to stop here or it's going to go higher?
Higher.
That's what tends to happen in the market. The more money that is taken, the more the moves. That's why inducement liquidity is the liquidity that tends to take structural liquidity, and the inducement itself then eventually leads to price expanding. Let me quickly show you guys a good example from the higher time frame, because that will be quicker. Let's do the weekly, for example. Now, if you look at this weekly time frame, what do you have? You have some nice push. Okay, I'm just going to put it here. You have this nice push, higher high, higher low, higher high, higher low, higher high. What's that? Fixed US inducement expansion. Right? Lower low, lower high, lower low. What's that? Fixed US inducement what? Expansion. Fixed US inducement what? Expansion. Even in between here, you have fixed US inducement what? Expansion. Can you guys see it?
Yeah. Yeah.
Now, with this, let me show you guys something from yesterday. You know why this price dropped this much?
No.
Can somebody tell me why?
Yeah, because for the news yesterday, no?
For what?
For the news yesterday.
I didn't even know there was news. Bro,
To do with coronavirus news or something, I think.
bro, I tell you, all those news is just a reason to push the market more. The market uses liquidity all the time. Do you know we've cut every single news since the beginning of this year that I started this whole thing? We've cut every single news on EURUSD in the community. Every single news. It's always based on liquidity. Yesterday, I'm going to teach you guys something now on premium discount and its equilibrium pricing, showing you guys an introduction to what transfer of money is, and you will see how that happened yesterday. Now, what do you think is here?
Stops.
Was it grabbed or not?
Yeah.
Yeah, there's like a break even.
Now, isn't it? Now, what stop was this? Is this a higher time frame or a lower time frame?
Higher time frame.
Hard
If you
time.
look at this closely, you're going to see that this is on the 4-hour time frame. Even on this 4-hour time frame, we have a lot of noise, right? Yeah.
Mm-hmm.
Yeah.
If you go to the daily time frame, watch. Then load quick. Don't have time for this. Good. Now, on this daily time frame, you don't have a lot of noise, but you still have something to say, oh, there is noise. Right? Yeah. So daily time frame is actually good. There is less noise. Now, this liquidity here was taking. You see that? This liquidity, remember, I don't know if it was you guys I was analyzing this week. I said this was from a weekly demand. So we're looking at price taking out this high initially to this level or somewhere here, which is the next efficiencies, right? Now, price took out this liquidity. This we can claim to be a daily liquidity level that was taken. Since price took out this daily liquidity level, okay, this is a magical setup I want to give to you guys. It works all the time. But I've never said it to anybody before because I don't want anybody to say, oh, but you said it works all the time, like 100%. I've actually seen things that work 100% in the market, but I don't like talking about them. Now, if you have, let me show you, let me quickly draw this up for you guys. If you have a daily liquidity graph, for example, okay, let me do it this way. Let me use this as an example, the way it is here. If you have a daily liquidity graph, never expect a 4-hour efficiency to hold it. Price will more than likely take out this efficiency here before it continues again. Because that's if it wants to continue bullish. It is more than likely going to take this. The kind of trade I like the most is the ones that comes to this efficiency and respect it. Do you know why? Because once it respects this efficiency, the efficiency bearish, it will definitely respect that one and continue lower. It happens all the time. That happens all the time, 100%. But please, after today, even if you don't understand it, don't ask me about it again because I'm not going to talk about it. I don't want anybody to have something that say, oh, but you said it's 100%. Are we together?
Yeah.
Yeah.
Good. So then, you see, a daily liquidity was grabbed. Don't expect a 4-hour efficiency to continue this guy higher. It is more than likely going to take out the 4-hour liquidity before it can continue higher, and you're pretty much trapped here. If the delivery is still bullish, this will more than likely break the next time. But if you didn't take out this low initially, and the delivery continues from here, this will more than likely go lower before it goes higher again. Am I making sense, everybody?
Yeah. So the liquidity that we took on daily, what's the not structural liquidity, or it is structural transaction? Sorry, no.
Yeah, this is now in this case. You see, if it starts taking for this daily, taking this high, which is the new lower high, would have been what inducement liquidity. Now it lets it take out this level. We know that there's liquidity in every highs and lows. We can't tell for sure that, oh, a liquidity is here. We can't tell what name of liquidity is here, but we can claim that this is a transactional liquidity because we are currently delivering bullish.
Okay.
Remember, that's why I said one major determinant of transactional liquidity is dependent on how price is currently delivering.
So price did the inducement liquidity yesterday, so continue buying to grab more money.
So now, exactly. So you see, when price grabs this liquidity, look at, I told them yesterday, it was even live, I said, the next target is here. I never knew there was news. Can you see that? It won't respect that efficiency. It's going to grab the liquidity here to use that to push higher too.
So
now, if it respects the efficiency, if for example, price respected this efficiency and did something like this, what it is going to do is come back here, get efficient again, then grab this liquidity. If this is still continuing higher, it will grab that liquidity finally here and then continue higher. These are also part of transfer of money topics too. It's not in the curriculum at the moment because I'm still working on it. But as soon as I'm done, I would put everything into a community call for you all in the community. Okay?
Yeah.
Okay.
Yeah. But it's in the curriculum for those that will attend every boot camp or the boot camp refresher. But you guys don't worry, you'll get it in the community call, okay? So now, that was exactly what happened yesterday. You see that? Because the higher time frame liquidity has been taken, the target is that it is most likely going to grab the next possible lower time frame liquidity. Now, to do this, what did he do? Let's go to 5 minutes. Boom. What did he do?
MSU.
The US inducement works like a charm. Works like a charm. At this point here, can you see this candlestick formation?
Yeah.
This is the candlestick formation the market does 70 to 80% of the time when it is ready to reverse. It is a candlestick formation I use for most of my entries. It is called the rejection candle. I don't teach this explicitly, but I begin to chip it in from this stage till we get to the forward testing stage. Then you see how I apply.
Okay.
Okay. Now you can see here, after that liquidity grab, what happens again? Can you see the rejection candles?
Yeah.
Exactly.
Yeah, there were
70% of
selling that.
What is it?
There were people selling down the rejection candle on the community.
Yeah. Those are those shit. Now, aside from even people selling there was actually a reason to sell there on the 1 minute. If you look at the 1 minute time frame, some broker gave here as an inducement, some broker gave nothing, so that was fake BOS inducement. Some broker gave nothing. Some people saw it as fake BOS inducement, and then they sold here. For those that switched quickly to 5 minutes, saw rejection candle, and like, okay, let's just jump in. If you look at this now, let me show you guys something. For those of you that are aware of what's the name? Sponsored candle and the concept of ISC. Do you see that?
Yeah.
Now, oh shit. Yeah, that. Yeah, we'll talk about this in our next. That's next thing we're talking about, equilibrium pricing and how transfer of money works. Can you see that? 50%.
Yeah.
The BOS, inducement. There you go. Rejection candle, execute, blah blah blah. Pum pum pum.
So you blend all those 1 minute candles, those bullish buy to sell candles, and then 50% of that is the entry.
Well, no. I wouldn't enter the trade because of 50% of this, and I might enter the trade because of 50% of this. The usage of this is completely different to a number of schools of thought. So I will just tell you what is objective about it and what is subjective about it. Then depending on the market scenario you find yourself, that will determine if you are going to use it to buy or not.
Okay.
Yeah. So you guys see how it all works now here?
Yeah.
Good. That is what liquidity is all about. Liquidity is not equal highs, equal lows, or relative equal highs or relative equal lows. There is nothing, absolutely nothing relative in the market. Okay, if I have this, and then this, what does this mean? Some people will say, oh, that's relative equal highs. Am I correct? And they will be looking for a trade here. But me, what I see here is different. What I see here, excuse me. So what I see here is liquidity sitting here, and this liquidity is taken, liquidity sitting here. That's all.
Mm-hmm.
So I believe price can actually take out this liquidity here, mitigate this tiny thing here, and then drop. Maybe do something like this. I will say this guy while you are still looking at relative equal highs. You need to understand. You need to understand how the liquidity works in the market. It has nothing to do with relative. It has nothing to do with order flow. And the concept of order flow, objective way of looking at order flow, falls in equilibrium pricing actually. But then we quickly chip that into. I didn't even teach the other guys, not group A, not group B rather. I'm talking about the guys who left the October group earlier. I didn't teach them anything about the equilibrium pricing thing. I'm just teaching it now to you guys, and then I taught it to group B yesterday. Is it clear?
Yeah.
No. Good. So when you look at the market, every time you want to pick a trade, you have just 4 questions at the back of your head. The first question you're going to ask yourself is, where is the next EPA? You identify it, then you ask yourself, where is the next inducement liquidity? You identify it, then you ask yourself, where is the next structural liquidity? Then you identify it, then you ask yourself, where is the next transactional liquidity? Now, all your trades must come from only these 4 levels. And those 4 levels, preferably look for them on the higher time frame. So when you look for them, for example, on the 1-hour time frame, then you also look for them again on the 5-minute time frame. Having an idea, take close attention. Having an idea of what it looks like on the 1-hour time frame, for example, let me use blue to indicate my 1 hour in an uptrend. Let's say I have this guy and then I have this guy. So now, if I look closely at this, my next inducement liquidity is where? Here. Am I correct, everybody?
Yeah. Yeah. Yeah.
Right? Transactional liquidity has been what? Taken, isn't it?
Yes.
Yes.
My next efficiency starts from where? Here also. So right now, what am I expecting? I'm expecting possible correction, right?
Yes.
And my next structural liquidity is where? Is here.
Yeah.
These are all the levels I'm interested in targeting for my higher time frame. Okay, these are all the levels I'm interested in targeting for my higher time frame. Now, there are also the levels I'm interested in picking trades from a higher time frame. Liquidity for entry, liquidity for exit. Now, at this point here, I know liquidity has been taken, correction is expected. The next thing I'm going to do is I'm going to jump into my lower time frame, and then I look for how I can jump into this trade. So now my lower time frame, for example, the 5 minutes looks like this. I ask myself on this lower time frame, where is the next liquidity? Transactional liquidity has been taken, inducement liquidity is here, structural liquidity is here. Then I look closely, and then price is currently delivering bullish. I have no reason to jump into the price because I don't want to be messed up with the 1 minute. So I wait patiently to this level, and I ask myself, is this efficient? And the answer is no. So I'm still waiting. Then fortunately, price grabs this liquidity, and then I was able to catch a sell here directly based on my 1 minute. You guys see that?
Yeah.
Now, if I catch this trade, where is my target? My target is what? The next liquidity level on the 1 hour, and also the next efficiency on the 1 hour initially identified. Then price goes and drops, and I'm excited about it. I took partial because each one is now efficient. Then price comes back here. My 5 minutes, is it efficient or not?
Yes.
Yeah.
Yes.
Can I sell?
Yeah. No.
Yes, I can sell because
You
it's
can sell.
efficient.
You can sell.
But will I sell?
MSU.
No, I need an MSU for me to sell. And then price continues here, and then price does something like this. Now, will I sell?
Yes.
Yeah.
Then I sell this 5 minutes level using the 1 minute MSU, and it continues again like that. Now it taps here, I begin to watch closely for a buy. You see that? Then price goes there, I'm still watching, goes here, I'm still watching, goes up, I'm still watching. Then boom, price taps here. Do I have an MSU into this inducement or not?
Yes.
Yeah.
Yes.
Then I buy my 1 hour liquidity based off the 5 minutes. And where do I target next now, everybody? The next 1 hour liquidity levels, which is where and where. The next liquidity level is the last high before the main high. Then we have here, since we are considering this as an uptrend, as the next transactional liquidity. You see that, everybody?
Yeah.
Now, if price continues, for price to continue higher, I'm also going to keep looking at the way this cycle is downward. That's the way I'm going to keep looking at it again to see if I would catch a buy opportunity and more buy opportunities, the price goes higher. Can you see how the higher time frame is the entire guide for everything that you deliver on the lower time frame now?
Yeah. Yeah.
Interesting, right? I hope it is making sense too.
Yeah. Sorry, bro.
Yes.
Just one question.
Please ask.
Don't zoom out, bro. Sorry for me.
Yeah,
to...
I'm not zooming out. I just want to.
Can I annotate, bro? Can I annotate?
Yeah, you can. Wait, hold on.
Okay.
Yeah, you can annotate now.
So when you took out the 1 hour structural, transaction liquidity, right?
Yeah.
You took out this, right? And then M5 did this, right? On the purple one. If you see because it made lower low, right? Lower high, and then lower low. Then you have the structural liquidity like there, right? If if in here guys 1 minute, you will take it? No.
No.
Okay.
No. If price comes into this structural liquidity here, is there structural liquidity there? Yes, there is. Okay. If price comes to this structural liquidity here and it's showing signs to reject, will I tell that, everybody? What was the rule? Never sell structural liquidity directly, right?
Yeah.
So the first question I ask myself is this even efficient for me to consider this structural liquidity as a trade? Do you understand? Now it is not efficient. Okay, but price taps into the structural liquidity and it's rejecting. For me to be able to sell this, do I need an MSU or not?
Yeah.
Yeah, I need an MSU for me to sell this. But even if I have an MSU here, I still wouldn't sell this. Why? Because it is not yet efficient.
So you need a new low.
I need a new low to confirm the efficiency here.
Okay.
So I did bin, it was something like this. Then I have structural liquidity here, and then price taps it. Then it now gives me 1 minute MSU. I'll be glad to sell this.
Okay, I understand now.
Because what? This is now efficient.
Okay.
Is it clear?
Yeah, thanks a lot.
You're welcome, bro. Logic. Now, be careful with transactional liquidity, because transactional liquidity can also be inducement liquidity. Because if you look at this, we're looking at here as the next transactional liquidity, but also it turns out to be what? Fake BOS and inducements too. Can you guys see that? However, it was fake BOS and inducement here, but it turned out to be, and this was seen as transactional liquidity. So be careful about it. What can you do about it? Nothing. But you can always look at this level first as a liquidity level before you start attaching a name to it. So irrespective of it being transactional or inducement, you know that this is a liquidity level and your trade is only going to happen at the follow-up MSU. Does it make sense now, everybody?
Yeah.
Good.
That was my main doubt, because I thought that for us to sell, imagine on the transaction liquidity, we need to have first imagine M5 BOS and then an MSU, but we don't need to have it, right?
Yeah.
We don't need to.
You don't need to what?
Because if we approach transactional liquidity like this, like this,
you know liquidity has been taken, you're looking for a sell opportunity.
yes, but imagine
So in getting your sell opportunity, all you need is a delivery like this. You need an MSU, an efficiency, all the rules you'll be given to still get into that trade. The purpose of transactional structure and all of this is to show you the cycle in the market, how price tends to move from structural to transactional to inducement to efficiency, and price does this continuously. That is the liquidity cycle. It happens on all time frames. So what we do for intraday trading, we try to identify those levels on the 1 hour time frame or the 4 hour time frame or the 15-minute time frame, depending on how price is at that particular day. If price is not noisy, we use a higher time frame. If price is too noisy on the higher, if price is too noisy on the lower time frame, we use that. What I mean by lower time frame is if price is too noisy on 15 minutes and 1 hour, you use the 4 hours to identify the key liquidity levels, which are nothing but these four, right? Then if price is less noisy on the lower time frame, then you identify it on that lower time frame. But the most important part of it all is that to deliver the price into those levels, you always use the 5-minute time frame. That is why I told you guys 5 minutes is the most important time frame for intraday trading. And you guys see that liquidity is actually an interesting topic. It's not boring.
Yeah. Yeah.
yeah. Yeah, just one more doubt. Sorry.
Yeah, sure. And
Sorry.
as many as possible. I'm here for you, bro.
Imagine this. I'm going to draw this circle in here. Okay.
Mm-hmm.
Imagine we have the transactional liquidity is there, and we approach it like this. Okay. Imagine this is M5. Okay. And I'm going to do on yellow M1. Imagine this is M1. We didn't break M5, right?
Mm-hmm.
Price went there. I can sell this MSU.
Mm-hmm.
I can sell.
Yeah, you can sell.
Okay.
Transactional liquidity was taken on the higher time frame,
Okay.
and that caused you to look for a sell opportunity. That sell opportunity is based on the MSU that happens here, or efficient pricing that happens here.
Okay. Okay. Even without the break of structure on M5,
It doesn't, remember, you don't do break of the structure.
Yes.
We've thrown away break of the structure a long time ago.
Yeah. Okay, bro. Now I understand. That's why I
you don't need break of.
I was a little bit confused, bro, about that.
Yeah.
Thanks a lot.
Break of the structure keeps you stuck to POI trading.
Yeah.
Hey, Yusuf, I got a question.
Shoot, man, I'm here for you.
So like he was saying, once the transactional liquidity is taken, like you said, you sitting there looking at the 5 minute, looking at either EPA or 5 minute MSU. So either one of those two then allows you to go to the 1 minute and look for an MSU, basically, right? To sell.
Yeah, I would, once I find either of both, then I can now go to the 1 minute to pick my entry based on MSU or efficiency, based on the fractal nature of the education from the beginning. But I have to see it first on the 5 minutes, because I'm delivering the 1 minute into the 5 minute target and the 5 minutes into the 15 minutes or the 1 hour target.
Yeah.
So I need to set my direction right first from the higher time frame.
Yeah. Okay.
Awesome. Anybody got any other question? Ivan, we good?
That's a really interesting topic, liquidity and liquidity cycle.
Yeah.
Okay, I'm good. When the transaction liquidity is taken out, sometimes we can see the traders to breakout traders, support and resistance. You understand what I mean? Well,
yeah.
But in this case,
their liquidity was taken, and that's why that correction will more than likely happen.
All right.
That's why you see that in most cases, price makes deep retracement because a lot of liquidity was sitting here. So this transaction can't be just shallow.
All right.
So, but sometimes price takes this liquidity and does not make deep retracement. It just keeps going up. The reason for this is that the liquidity it took here supersedes that was here.
Okay.
It's a crazy thing. It's just logical.
Yeah. We need to see closely the price action and react
exactly accordingly. So that's why I said if the price action is like a programming language, you need to understand, you need to watch, you need to listen, and then react accordingly. That's why I always encourage you not to trade the whole day. Pick 2 hours, 3 hours, and then trade, because like I told somebody today, if you are having a discussion with somebody, the person is speaking a language you understand, you will be able to respond, right?
Yeah.
Now you guys are interacting. If you keep interacting for like an hour or two, the conversation will be meaningful. But by the time you start getting to 4 hours, 5 hours, 6 hours, then the conversation becomes not meaningful anymore. Does it make sense now? Everybody gets tired. They love the mission concepting. So it's more or less the same thing with the market. You're interacting with one another because our trading style requires you to actually watch price candle by candle because you understand what every candle formation is actually talking about. So how long do you want to do that? When you can do this efficiently for an hour or 2 or 3 hours daily, and then you make good percentage of your account and you're done for the day. Does it make sense?
Yeah, bro.
Yeah. Good. And it doesn't restrict you to any timing. It could be Asia, could be New York, could be London. Any timing at all, everything still revolves around the same liquidity cycle. It is around that same concept that people begin to build the concept of time and price, whatever. By the end of the day, this is superior to it. They're just taking a fraction of it and say, oh, within this time, this happens. I'm telling you, within those times, if there is no MSU, that trade will never happen. If there is no liquidity graph, that trade will never happen within those times. So, oh, it happened today, but it didn't happen tomorrow. Oh, that's what you find there. Is everything clear?
Yeah, bro.
Awesome. Yeah. Awesome. Wang, is it clear?
Yeah.
Awesome. Good. So let's look at this pretty little guy, and then we'll take a break. Then we'll continue with algo market structure, shall we? For now, take a screenshot if you need to, or as I was declaring the screen. Oof.
Yusuf, one question.
Ask.
What do you think about the box of the Asian session? Is liquidity or no?
You want my honest opinion? The answer is no. Asian range has nothing to do with liquidity or not. You've been in the community for a while. Have you seen anybody mention Asian range, whatever?
No, I never saw.
Yeah.
I was looking for, but I never saw.
Asian range has nothing to do with liquidity or no liquidity or whatever. This is all what liquidity is. This is what builds Asian range. The reason why you see Asian range is slow sometimes is because of the volume being traded in the session. Do you understand?
Okay, thank you. Thank you for the answer.
You're welcome. You're welcome, brother. You're welcome. So premium, discounts, and equilibrium pricing. Now we know that in economics there is something called the demand curve, right? And in that demand curve you have the sell curve, now you have equilibrium, you have premium. I can hear myself. And you have discounts. Now, applying this to the market, a number of people apply it as such. It'd be like in a downtrend, for example, you have lower low, lower high, lower low, right? And when you have this, especially smart money concepts, they tell you what says that from this low, excuse me, so from that high to this low, there's equilibrium here. You say here is premium. You say here is equilibrium. And here is what?
Discount.
And then as a rule of thumb, they'll be like, never sell from discount because you sell when the price is high and then you buy when the price is low, right? So you say never sell from premium, and never sell from discount, and never buy from what? Premium. So you only buy from discount and then you sell from premium. So what? They are expecting price to come into premium before they can sell, right? Expectations. So that's the rule. Oh, I'm not going to sell that trade except it comes to premium. Well, can you count how many times price turned at discount in the market? Can you count it, everybody?
Many times.
You see why
it happens?
Yeah. Now you see why you have to keep waiting for your POI to be hit, and it might not happen in a week. And you're frustrated you pick the wrong trade because you're waiting for premium.
Waited a week.
I remember somebody was like, "Isu, what can you do for me, man? I don't want to keep waiting for a week for my setup to be met, and then the moment price comes into my POI, I'm in the toilet." I tell I'm out of the toilet, the trade is gone. I have to keep waiting again. So, can you count how many times price comes and fucks up your premium and then drops?
A lot.
A lot. Does price comes to premium and drop? Yes, it does. Right? But that is not objective. And the same thing applies to what? Discount. So we don't consider premium or discount in our trading. Because the way we trade, we are moving like the algo in the market. So if the market is going to go to discount and drop, we're actually moving together to that discount and we are dropping together. If the market is going to go to premium and drop, we're actually going to the premium together and we're dropping together. If the market is going to go to equilibrium and drop, the same thing, we're going together, living together. And if the market is going to fuck up your premium or fuck up your discount, it doesn't matter to us because we are the one fucking you up. Does it make sense now?
Yeah.
Yeah. Mm-hmm.
Yeah. Okay. So if you look at it logically as an algo trader, based on what you guys have learned so far, you would tell that, oh, looking at this market, your next possible level is here. So to get, and you'd be like, no. You pack a bunch of smart money traders. You'd be like, no. I'm not selling that trade until 6 years. And some money traders be like, no. I'm going to sell it here. No, this is premium. And then he does this, and the person will be like, how did you know? What happened? What did you see? Say, oh, nothing. I just waited for price to come to this level. Then after I did BOS, then I sold. Oh, so it was still BOS. Yes, it was BOS. Just leave me the trouble away, please. So that's how it works, man. I remember there was this time I was getting a lot of questions on my DM. Somebody was asking me, why did you sell there? That day I was in the mood. I was in the mood for fun. So to catch cruise, I was like, well, I felt like selling, I sold, and then the market sold. Oh, really? Yes. Try it. Okay. Now, the only thing that is important amongst all of this is equilibrium pricing. Because nobody hates to be cheated. That's the purpose of transactions. So you can gain value as the seller and I gain value as the buyer. So equilibrium pricing is the only thing important there. And you see, the good thing about equilibrium pricing is the first thing that is going to introduce you to what is called transfer of money. Now, what is equilibrium pricing? If you pull out your Fibonacci, okay, 50% of that level, just like demand and supply, 50% is equilibrium, right? So if you pull out your Fibonacci, for example, in an uptrend, you have higher high, higher low, higher high. The entire sell to buy range price is said to have achieved equilibrium when it taps at least 50% of the entire sell to buy range. Not when it has achieved efficiency. Efficiency is different from equilibrium. Now, efficiency means that price is efficient. It doesn't mean that there is still no money in this demand level. But when price starts equilibrium, it's possible that what it means is that whatever conflict here, everybody has agreed to it. So there's a huge possibility that when price visits this demand level again in the future, it is more than likely going to take it out. Everybody please pay close attention. Because the money here has been agreed upon, so there is more or less no more money here. That is why you would notice sometimes on charts, which happened yesterday, happens every day, you see price does something like this, taps equilibrium or more, goes higher, taps efficiency, goes higher, comes and induces your efficiency, then goes higher. Then the next time it is coming down, you think it is going to induce this low, but it takes out the whole thing, taps its structural liquidity, and then continues higher. Why? Because this already tapped into equilibrium. So there was a huge possibility that there was no money here, there was no money here. So just that this is the structural liquidity, and it grabs everything and continues again. Can you guys see why I said it introduces you to transfer of money, telling you how money is being transferred in the market? Yeah. the crazy logic, right?
Yeah.
Yeah, it's crazy. Jeez.
So this is the reason why when you want to pick entries, you look closely at that zone of your supply or demand, looking at how the 1 minute delivered. If I, for example, I have identified supply, price taps right into my supply, then price does something like this. Okay, like, wait, this is am I correct? But is it at equilibrium? No, it is not. There's a huge possibility that the mitigation will be at the 50% of this equilibrium here.
Okay.
Okay.
Jamis, I believe you understand what this is for now. Because I saw your post and you're like, perhaps I'll tell you to unlearn it, but no, you have to unlearn it. You just need to know how useful it can be.
All right.
Okay. So I know there is money here, but I also know that there is money above it because it hasn't smashed equilibrium. So I want to be careful with picking this, even if it is efficient. So for me to, that's why for you to pick this, you must always wait for what? MSU. You must always wait for liquidity to be created for price to deliver. Well, this is the foundation to transfer of money, and that's equilibrium, and that is all about that. I will touch more on transfer of money, and you'll be amazed at what we will learn in the future. Oof. Let me share my screen and show you guys a typical example from yesterday. Now, you all see my screen here?
Yeah.
Yeah. Now, if you look at this, can you see what happened here? Price came into this level. Let me draw something. You see, price came here. Did it start equilibrium?
No.
Did it start equilibrium?
Yeah.
Yeah. So there's technically no more money here. Did it start equilibrium? No. There's possibly money here. Do we have a buy to sell here? Yes. Is it efficient? Yes. But then when it induced it, it went right into equilibrium and drops. That was yesterday. Now, let's follow all of this that happened here. Going bullish. You have this entire buy to sell range. Okay, sorry. You have this entire buy to sell range. Now, fortunately, in this case, the price comes to equilibrium. Yes, it did, isn't it?
Yeah.
Mm-hmm. Yeah.
Good. Now, what about this? You know, Aisha, I'm in class. I'm at work. I'll call you back. Now, if you look at this closely, the price tap equilibrium. No, right?
Yeah.
Let me zoom out. Just watch. Watch. The price tap equilibrium, yes or no?
Yes.
Good. Now, first thing first, let me do this. Study price. The last high, this is the last low, right? After the low, higher high, higher low, right? Higher high, then higher low.
Yeah.
Then we had higher high here, then higher low. Am I correct?
Yeah.
Yeah.
Good. Now, this push on the higher time frame is one, making those higher highs and higher lows. Now, look at this here. Below this, there is still money because equilibrium has not been tapped, which means I should be careful for picking trades on this efficiency here. Can you see that?
Yeah.
I'm telling you guys that the first year I'm teaching this, I was always saying I won't teach it, but here I am. Going in depth. Now, when price comes here, I have to be careful because there is one here. When price came here, it reacts or not.
Yeah.
And you see the equilibrium here. The price reacts or not. Smash this guy completely because there was still money below it. This one, it didn't come here straight up because of what? These have been tapped. But it needed to continue price lower based on the fact that it took a higher time frame liquidity here. So what did you do what did you have to do to get that? It grabbed the structural liquidity. Can you see that? Then it took that into this level and then dropped. So you can see how you can analyze and have, I know you had confidence in this before, but you can see how this can give you crazy confidence.
Yeah.
You can tell, particularly you can pinpoint where the money is in the market.
My head's about to explode. That's crazy.
Man.
So once the liquidity cycle has been set, you identify those liquidity levels you want to pick your trade from, you can pinpoint how the money is being transferred within that liquidity level, and then you can pick that trade with confidence.
Damn.
Yeah. This was yesterday, not cherry picking anything. If you look at this here, just take a look. You see price got right here. If I'm not mistaken, there you go, right at the equilibrium. You see that? So there's a huge possibility money is not in any of this again. Remember what you said about higher time frame, and that's what gives this free fall. But even in between, you can tell if there is still money or not, if there's still money or not, if there's still money or not in between. And you just try to manage your trade. But don't stress it too much. Just work it around your key liquidity levels. So you don't just monitor too much. Monitor it around key liquidity levels, pinpoint it, catch the trade. You know which one is more close to being safe, more than 80% safe, and the one that is not. Catch the good wins, catch the good loss, and then be happy with yourself. Transfer of money.
That's why Group A was like, man, they got done with you the other day after the liquidity thing, and they were just blowing the Discord up. Man, they was pumped. I get it. I get it.
Yeah, man. So let's take a short break before we jump into algo market structure. Okay.
Okay.
We're supposed to end this session by in the next 1 hour, right? So in the next 1 hour, we still have approximately 2 hours, or 1 hour 15 minutes thereabouts. Or let me just say 1 hour. Sorry, we still have like 1 hour 40 minutes. Am I correct?
Yeah, bro.
Good. So let's take a 30 minutes break. 1 hour 10 minutes is enough for us to tackle algo market structure too.
Okay.
Yeah. Okay. All right. So see you guys in 30 minutes. So that will be by 2:50.